Most traders are completely misusing the stochastic oscillator indicator, turning what could be the most powerful profit tool into the biggest source of losses. With markets becoming increasingly unpredictable, finding reliable technical indicators that actually work is more crucial than ever. What if I told you that making just one simple adjustment to how you use the stochastic could potentially double your win rate and help you spot the exact right moments to enter and exit trades? Now, I have spent over a decade testing different variations of this strategy across bull markets and bear markets, and even helping my students do the same. And after analyzing hundreds of trades and thousands of potential setups, I finally discovered the approach that consistently delivers results regardless of market conditions. All right, so let's simplify something. Most traders overcomplicate. What's the stochastic oscillator? The stochastic is a momentum indicator, and it tells us how strong or weak the current price movement is. It moves between 0 and 100 and helps identify moments when the market is overbought or oversold. So as you can see here on the chart, here's 80 and here's 20. And as we can see here, the market is above 80, which means it's in overbought territory. And here, the market was below 20, which means it was in oversold territory. And as we can see, when it was overbought, market went down. When it was oversold, market then turned up. Now, understand this. It simply means momentum is stretched and a reversal or slowdown might be near. We use the stochastics to time our entries with momentum, not against it. It's especially useful when the market is forming key patterns like double tops or double bottoms, and we want to confirm a potential reversal, or we're looking to fade extreme moves onto lower time frames. It adds a second layer to your trading, combining price action with momentum confirmation. So now let's talk about a double top pattern, one of the most reliable reversal signals out there. A double top is when a price moves up to a resistance level, as you can see on the screen here, and peaks at the same or similar level. Okay, so it's touched once, it's come down, come back up, and should come down. Kind of looks a bit like an M pattern. And now let's talk about what a double bottom is. And as we can see here, we can see a smaller one where the price has peaked at the same or similar level. It's where price has come down, touched it once, up, touched it again, and gone up. Kind of looks like a W, right? Now, understand this. A double top is a sign where the market is struggling to push higher and sellers might step in. We're looking for that second peak to fail and then drop below either the neckline or use other various tools that could help find a short and the complete opposite for a buy using the double bottom. Now here's how I'm going to show you a little bonus 5-minute trading strategy that you can use with double bottoms, double tops, and the stochastics. Let's head over to the charts. Right, guys, very simple. So this is how it's going to work. You're going to have a no strategy. So if you're using smart charts, make sure you're on the no strategy page and you're going to be in the 5-minute time frame. And in this case, I'm using the Forex and I'm looking at the euro dollar. So as we can simply see here, I just look for a double top where price has peaked at the same or similar level. And then at this case, I can simply see that market is touched at, and market is also in overbought territory. So technically, market could be selling. Now in this case, this is where you might want to watch my other video about the price actions and what price action patterns you can use to help you in this area. Now in this case, we can see the market could be forming a reversal pattern. So if this bar closes as a 3 inside down, I might look for a trade idea there, or what you can do is go down to the 1-minute time frame, and what you can see here is a break of structure. Higher high, higher low, higher high, lower low, lower high. And in this case, we will call this a re-entry. So we put that level here off that swing, and we're going to place a sell with the stop loss just above there, and we're going to sell just to back this area here, around about 8 pips, and we sell. So now you can see simply we made a trade idea on the 5-minute time frame where we saw a double top, stochastic overbought, price peaked at the same or similar level, and then what I exactly did is drop down to the 1 hour time frame and use the price action breakout pattern that I've shown in my previous videos where we saw a higher high, lower low, lower high, lower low, where it's like a retest area, which is right here. And as we can see that's what we got there. Higher high, higher low, lower high, lower low, lower high. That is the retest area. So I'm using the 5-minute to find an intraday trade and enter on the 1 minute. And we're just going to take a little bit out of the market, in and out, especially during this unpredictable time with Trump in the White House, and especially what's going on with these tariffs. Now, if I was to look at a previous double bottom and a buy, as you can see here, the market made a higher high, so 1 touch, 2 touches, and shot back up. Now, in this area here, we can see we're coming at the oversold area. And if you really wanted to, you can see it was a stronger stronger support area, not resistance. Still get it up, still get it muddled over all these years. And what we can see here is if I drop to the 1 minute at that time, where it touched it, you can see the retest entry, which is where the market made a lower low, higher high, higher low, higher high. And as we can see here, potential retest entry. Now, as I'm showing you this, some of you might find this a bit advanced. That's the retest entry. Some of you might want to have gone lower around about here, which you could have entered here. Some of you might want to have waited until it got to here and re-entered. Let's try find another one, shall we? Let's go to the GBP USD. And let's head over to the 5 minutes. So all you're going to do every day, you're just going to look for a double top and a double bottom. Now in this case, this looks like a beautiful double top. Now in here, we can see price peaked at the same or similar level, right? Touched the bottom. And in this case here, market was in oversold territory. And as we zoom in, this is where we go for our advanced price action. There is a candlestick reversal there. Now, in other cases, let me show you something. Let's see if we can drop down to the lower time frame there, but you won't really need to. You're just simply looking for a break of structure pattern where the market simply made a lower low, lower high, lower low, higher low, higher high. So your retest area is just there. Then you buy. Now you're probably thinking, oh, do I just enter on that price? Yes. Where do I put my stop loss? At the low of the swing there. Where do you take profit? Well, wherever your stop loss measures, that will be your take profit. Okay. Now, as we can see here, market was in a double top. There's a little small trade, but we don't like that. And just for someone who wants to trade intraday, you could just look for different trade ideas. Go for volatile pairs, go for pairs that are low spread. So I can organize my market watch here based on spread and put it in, let's say, spread up there. We can see what's the lowest. So let's go for Aussie dollar, right? Can we see if there's a double top anywhere or a double bottom, or where there was previously a nice trade? You can see that there was a nice double top right here. And then market obviously made a lower low, lower high, retest, and you could have short here. The pattern is very simple. We're just looking for a double top and then a break of structure, retest, and then boom, right? Because that's where the swing was broken. And you will get better at this, the more you do this, right? The more you do this, and then you can jump down to the 1 minute time frame and call yourself a fast time frame trader. So as you can see, we've placed a trade on euro dollar based on the strategy's rules, and I'll show you what the outcome is once the trade's done. Now, if you like this trading strategy and you want to know a little bit more about the breakout structure and price action patterns that I'll be using, make sure you watch this video here if you want to get more effective at this trading strategy. See you soon.